Good morning, everyone. Thank you for logging in for the first webinar for Wanneroo Business Association. Before I hand over to Trent, I just want to outline 3 features which you will all have at the bottom of your screen, which includes a chat option, a raise your hand option, and also a Q&A. So if Trent asks any questions, wants to get a feel of who's feeling what within the webinar, you can raise your hand, but we are encouraging people to use the Q&A section to post your questions for Trent to answer at the end. So I'll hand over to Trent. We'll kick off. So Trent Carter is the Director of Provident Lending and Business Solutions and Easy Business Loans, and he's going to be talking about business cash flow and accessing finance this morning. So over to you, Trent.
Thank you. So yeah, welcome guys, and yeah, looking forward to delivering this one to you. And any questions, feel free to pop them through. We'll answer the questions at the end as best we can, and if there's common questions, we'll sort of group those together. Anything I don't get to, I'll strive to answer to you anyway. And we're also recording the session, so you can, if there's any particular point you want to go back to, you'll be able to do that as well. To kick off, a little bit of an intro about us. I'm the Director of Easy Business Loans and Provident Lending, as Lauren just stated, and really my experience for the better part of the last sort of almost 20 years now has been in banking, finance and business advisory. I've been in corporate banking with NAB and CBA, and I'm the current state president for the Finance Brokers Association of Australia, which is doing a lot of good work at the moment in terms of that advocating how the government stimulus is flowing through the banking sector, just to make sure that it's fair for clients. So that's some interesting work's going on behind the scenes. Really, I've always had a passion for small business. We're a small business, and you know, we want to see that more people come through this than not, because really all the reasons we get into small business is because it gives us freedom, choice, it delivers us wealth, it rewards us. So you know, I'm really keen to make sure that as many people we talk to can deliver that, and the way we're doing that is through our 2 brands. And overall we have a purpose of not only achieving the right finance at the right time, to help them confidently finance their future. And for us, that last point, being confident about financing the future, is the key here. It's not about throwing money at a bad problem, but it's about doing it in a strategic way that you know you're going to use those funds in the right way. So yeah, without sort of dwelling on it too much, I'm going to kick on to what do we know so far. What do we know? It's unprecedented rapid change. It's going to cause a really significant downturn in the economy. It you know, undoubtedly will form into a recession, and that all sounds like really bad news, and it probably is. But however, I think we all need to be prepared for that and realistic about that, and understand that the government's not going to say, okay, we can stop this self-isolation now, we can open back up the economy and the businesses, and everything's just going to go back to normal like that. I sort of think that we're going to do it in about 3 phases. We're going to have this initial impact stage, which we're currently in right now, and that's going to last around about 60 days. This is going to be a real shock and awe in terms of that. People are going to be rationalising what's going on. A lot of people are going to be losing work or getting their hours cut significantly. And there's going to have to be fast change as businesses adapt. The next stage is sort of what I'm going to call the new normal. That's going to be operating for a sustained period of time in this distancing way, in this isolated way, and we're all going to have to figure out how to operate our businesses in that, stay social in that way. And then we're going to recovery from 6 months onwards. Hopefully we're going to start to see that recovery, but that, as I said, it's not going to be instant. I believe it's going to be up towards 2 years before we see a significant full recovery out of this, because people are going to accrue debt, businesses are going to accrue debt. The way we work is not going to be the same after this. People are going to become more efficient, more lean as a result of being forced to. And a lot of people are going to carry that style of work back out of this as well. So I really feel that we've got a long road ahead of us, but at the same token, I think we've got things to work towards. We will turn a corner. Growth will be apparent. Successful businesses come through this will be lean and efficient and ready for growth. And we may uncover new ways of doing business, which is also a bit exciting as well. You know, we've talked about how technology could transform business for a long, long time. All of a sudden, we're all forced to adopt it. And it's going to be really interesting to see how we all move in that direction. most importantly, I think we're going to have to focus on our own mindsets. The mindset of being in business is going to have to remain positive as best we can. We can only focus on what we can control, impact and change in our own lives and our own businesses, because there's a lot of external influence at the moment that we just can't control. We've got to adapt to those external influences, but we can't change that. So therefore we can't worry about it either. We need to be prepared to change, try new ways of doing things, move how we're going to change our service delivery, how we're going to change our product sales, networking, communication, all those type of things. And we've got to figure out how we're going to remain social. I think that's going to be a really, really important thing. And WBA is doing a great job of this so far. And I think we need to embrace groups like this, and even with your own clients and your own networks, how you guys can stay in touch, the face-to-face, the voice contacts. We've probably defaulted to a mode in society where we've relied on email as a primary source of communication for a long, long time. I think this is going to force us to probably pick the phone up again and start having the conversations with people, because we're not going to have that face-to-face interaction on a daily basis apart from your own kids and family. And after a while, I'm sure you'll be looking to speak with other people as well. And most importantly, we need to keep making decisions. We can't just go into our turtle shells and pull our heads in and wait for this to pass over and hopefully you've got a business at the end of it. Even if you're in a business that's looking at like closure, even if you're in a business that's going to be significantly cut down, you need to keep making decisions about how you're going to grow your business on the other side of this. There's going to be a lot of leeway for businesses that face those challenges. So now's a really good time to start dedicating that in terms of, planning your business, making sure that it's going to be right for when you can start trading again, how you're going to do it and ramp your business up as quickly as possible. And how you do that is you keep making decisions. The minute you stop doing that, you sort of let the world dictate what's going to happen to you. So where do you start with your business? Ultimately, it's a review. You need to know where you've been, and you need to know your numbers better than anyone else, because this is going to help your decision making. You need to know where your break-even point is. What's that tipping point in your business where you have to start making decisions about cutting staff, about, supply arrangements, whether you're forced to give up rent, whether you're doing those things. You need to know your numbers really, really well. If you don't have a reliable set of numbers so far for the half year, now's the time to go and do it. Work with a bookkeeper, and I'm sure the Wanneroo Business Association, and there's tons of local bookkeepers out there who would love to help you out at the moment. And to that point, that's where we need to be focusing as much as we can, helping each other out locally. So if you're going to engage with anyone, do it locally. But yeah, get a bookkeeper, get some accurate data to the half year, and then look at your trends, because now you need to do some forecasting based on certain inputs and what you're expecting to be able to identify those changes. You really want to justify the gut feeling is the point there. So where do you start with your review? I would start with your profit and loss, as most people are most familiar with this. And I think the first budget you need to do is your expected budget. What's a realistic view in terms of where your revenue is going to head? For some businesses, this will be down a lot. For some businesses, it might not be down so much initially as they're sort of finishing off a tail end of work, but then it might take a significant dip in sort of another 2 or 3 months. So what is the realistic trend for the business? And then you need to match the revenue, the expenses to that. And when you're doing an expense review, the things I like to focus on is asking 3 questions for every single line on your profit and loss sheet. Do I need it? Because if you don't need it, it's probably a luxury item at this point, and you could cut it or consider cutting it at a point where your revenue is low enough that you find that you're not going to need it. The other question is can you reduce your use of it or the level of the package that you're on? A lot of subscription models out there at the moment. As you might be bringing staff numbers down, or as you might be looking at reducing your level of input in certain areas, can you change your subscription levels with your suppliers? Can you reduce your use all over? And then ultimately, are there cheaper alternatives and substitutions? And again, really labour on that point that if you are looking at using alternative services, substitutions for things that you use in your business at the moment, look local first. We're all in business together. And the more we can do business with each other through this time, I would think that's a great thing. In terms of your net profit and loss then, which is where that results to, hopefully there's a profit. And if there is a profit, how are you going to direct that? Is it going to go into your personal life and prop up your family during that time? Is there going to be enough to focus on perhaps getting the balance sheet in line and doing some debt repayment or building cash reserves to make sure that you can wear out times when it might get even a little tougher still? If there is losses, and that's not going to be unfamiliar or anything to be worried about, but you've got to ask how you're going to fund those losses, because it might not be a loss forever. It's going to be a temporary loss. So how do you use the reserves that you've currently got, whether that be cash or redraw in lending or anything like that, government stimulus or debt to help fund the losses in your business? And from there, once you sort of got your expected model, you should still be doing two more models. And one's a downside model. What's the worst case, but you're still trading? Where is your head just above water? And that's going to involve further cutting of expenses, potentially more significant standing down of staff, lease negotiations, and getting really down to the bare bones of essential expenses only. And then finally, your upside model is, all right, well, what if you can pivot your business? What if you can look at different ways of delivering your service? And great examples of this is a lot of businesses who are in the food and beverage industry, cafes, etc. Some are really successfully transitioning to a home delivery takeaway type model that's going to see their business. Some cafes may even pick up early indications with one of the guys that I deal with is saying that actually having to transition his business in this way, he's forecast his expenses almost on the downside, but he's been able to focus on an upside of revenue that he's got from actually a home delivery service. So it might not mean that the end is nigh. It might just mean that you're finding a different way of doing business and focusing on the upside with your revenue and managing the expenses on the downside will certainly make sure that you've got a lean and efficient model. Through all this, I think, we need to acknowledge that we're all in this together, and your cost of goods sold and your variable expenses is something to focus on here as well. Your debtors and creditors, we just need to make sure that we're all working together and sort of have a handshake agreement, I think, between industry that we're not going to withhold payments for each other. We're going to make sure we're paying on time because everybody cash flow is going to be king. Which probably brings us to the next section, being the balance sheet. With balance sheet, this is where cash lives. It's probably the most obscure area of financial reporting for most business owners. They don't really understand it. Ultimately, it's the health of your business. And the balance sheet at this stage is no doubt going to take a hit for a lot of businesses. We fully expect businesses to accrue debt. If you're standing down staff, their staff accruals in a stand down situation, not a redundancy or a sacking situation, but if you're standing down staff for a period or reducing their time, their accruals are still going to happen at the same rate. So annual leave, sick leave, etc. So that's a balance sheet item that will continue to accrue. You may need to take on more debt, whether that be supplier debt, whether that be actual physical bank debt, whether that be owners' equity contributed into the business. It's still debt. So that's going to affect the balance sheet. So where possible, we want to focus on cashing up the business. Obviously, collecting anything that's outstanding is a great starting point. For businesses who carry stock, making sure that you're selling old stock, even if it's at a discount, just to get the cash back into the business, clear out supplier bills, making sure that you're running as lean as possible. For any service-based businesses, getting that work in progress that you can off your desk and into your client's hands so you can bill for it. And then obviously there's going to be some businesses that are going to downscale who might have the opportunity to sell unused equipment. Now, I wouldn't rush out there and start selling equipment because you want to use it again, hopefully in the next 4 to 6 months. But if there's older items that you were thinking of replacing anyway, or had been sitting around for a while anyway, now might be a good time to start to look at selling that unused equipment. You're probably going to be selling it at a discount, but the cash in your business is better than it just being locked up in a piece of equipment. Ultimately, this is where cash lives, and any government stimulus, any injections that you have in your business, you want to be making sure that it's working to keep your balance sheet as efficient as possible. And we focus on the current ratio for that. I think you can sort of forget the more long-term and efficiency type ratios that we look at when we're doing financial analysis, and really focus on one thing, which is your current ratio. Normally, in normal trading conditions, we would encourage businesses to have a current ratio of sort of 1.5 times current assets, so your cash and debtors, to your current liabilities coverage. So that's your tax, your ATOs, your your staff accruals, those type of things that might need to be paid out in a single year. I think if anyone would set a benchmark at this stage, if you keep it at 1 times or better at this stage, you're doing pretty well. So make sure that you're keeping an eye on your balance sheet as much as you are your profit and loss, because that's going to keep you focused on cash. And it's really going to help you make sure that you're not taking on debt that you don't need, or you try to be efficient as you can. It's important to know also what you're entitled to. There's going to be a full session on this next Tuesday, so I'd make sure that everyone gets on board with that one as well. And keep sharing these sessions around anyone that you know that are business owners, because it's important to be really educated around this. I've spent the last week reading everything and anything that's come out on this. I find the Treasury website, coronavirus, is the best website because it's straight from the horse's mouth. It is the fact. It's not got a level of someone else's interpretation in there. There's a lot of case studies and fact sheets on it, and I find it relatively easy to get through. But for small businesses, things that you can access are potentially the PAYG offsets that are going to be credited through the ATO, instant asset write-off. Again, there's businesses in there that are looking at growing and might need to tool up in a different way to move their business online, to go to a delivery model, to do different things. So they might need to acquire assets, and there's a window of time where you're going to be able to write that off in the first financial year. ATO arrangements are certainly being suspended and paused, and the ATO is being far more flexible with things like tax debt, letting that accrue and setting up payment arrangements down the track. So that might be a way that you can actually facilitate managing your own GST obligations or PAYG obligations in a time where things are going to be tight. A lot of sole traders and contractors out there. There are a few benefits that have come out for them so far. I expect the next stimulus package might have a little bit even more for them, but we'll wait and see. And getting access to super for a lot of individuals is going to be a big plus as well, being able to get that cash injection by early withdrawal of super this financial year. The two areas I'm most focused on being our business in lending and advisory is the government guaranteed business loans and the RBA funding into the banking system. Really, that's an effort to keep credit flowing. If we go back to the most recent event that's happened, it was the GFC, where we sort of had a significant decline in the economy. The biggest issue that prolonged that was the banks locking up credit because they weren't lending money to each other. What the government's effectively done is just pumped a heap of money into the banking system and said that we'll be the bank for you. We'll make sure credit keeps flowing to businesses and small businesses, because when they need access to capital, we need to be able to deliver it, because if you stop credit, businesses do stop flowing, and then we're relying only on the cash that's trading in the economy right now, and that certainly does slow it down to a really dangerous level. So all this stimulus is really to keep things flowing between businesses. So getting to the point of should you borrow, I've probably talked as many clients out of getting a loan at this stage in the early stages as I have told clients that it's a good idea. A lot of clients have rushed into, because they've heard the government stimulus package is there for the 250 up to 250k government supported business loan, and just because it's there, but they don't really have a plan for it. In that case, it's dangerous credit limit to have just sitting there, because you could use it on things that turn into core debt that never really enhanced your business model or changed how you were going to fund things. Or I've had some businesses that haven't even started a business review and reviewed their expenses and look at how they can scale the business down, rather than just using debt to pay their interest bills on certain things like asset finance or lease payments that aren't necessarily falling under the repayment holidays. And that's a really dangerous thing as well, because you're just adding interest to interest. So I've probably discouraged those people for the time being to say, hey, look, tidy up your shop first, figure out how much you can supplement, and then we can look to fund the gap, and that's a better use of that debt. So when should you be using debt? As I've talked about, if you're pivoting your business offering and you're going to need capital to do that, whether you've got to buy more computing equipment, whether you've got to buy a new delivery van or do those type of things, that's good use of debt because it's going to help you produce an income. Where businesses have a really clear end game about how they're going to repay the debt on the other side, that they've got capacity where contracts haven't been cancelled, perhaps deferred for 6-9 months. So they know that they've got the ability to direct that cash flow into the repayment of debt fairly quickly when things turn a corner. So that's a really positive thing from a banking perspective and a good use of debt in those times because it's just bridging the gap. If it's going to help you promote to new markets, certainly retaining critical staff. A lot of businesses are moving straight towards we've just got to dump staff, but you might be dumping critical staff who help you actually perform your role, or service your clients, or could be redeployed to get on the phones and talk to your database. So if you're helping retain critical level of staff, I think that's perhaps a good use of debt in the meantime. And certainly there's some businesses out there who have gone into this maybe not in the best shape in terms of their balance sheet. They might have some high interest debt sitting around there with credit cards, perhaps some business loans that are out there that are at the higher interest. The government guarantee loan might provide them an avenue to be able to use that and consolidate those higher interest debts, defer the payment, and redirect those funds into actually either cash accrual to make sure that you're ready for a downturn, or to pay those debts down a little bit quicker than what they had been before. So there is an opportunity for a bit of a tidy up through using the government stimulus as well. Next question I get a lot of is, how do they do it? At the moment, it's no different to what it was before. You've still got to go through an application process. There's still a credit assessment that's going to be done on your business. The rhetoric we're hearing from the banks, we haven't got the full picture yet on how they're going to deliver these government-backed guaranteed loans, is that they're going to be using the business's trading position for the 12 months prior to the coronavirus. So hence why I'm saying it's a really good idea to get to December in terms of your figures up to date, because that's going to enhance your ability to do borrowing if you need to. Because they're going to say, okay, if you're a good trading business going in, the chances of you getting a loan on the way out is a lot better than if you were perhaps struggling on the way in and this has just made matters worse. It's not to say that we won't be able to help you, but it's going to be a harder road, or we're not going to be able to get as much. In terms of borrowing and proposing to a bank, you've got to start with the end in mind. All the things I've talked about. How is debt going to enhance or keep your business alive? That's the story we really, really need to be succinctly telling the banks. We don't want to go in there with no plan at all, just give me the money, because they'll be a little bit skeptical of that type of approach. You also want to make sure you're getting the right loan type. There's a lot of different lending out there, from overdraft to credit card lending to business term loans, asset finance, debtor finance, and all have a job to do at different points. And it depends on how you're going to deploy those funds and how you're going to use those funds and what it's funding to be what the right product for you is. So don't just jump in there and take the first offer of money that you can get from a bank. Make sure it's paired up and you've got the right advice around how those funds are going to be used, because you could be getting yourself into a situation where you just develop hardcore debt, or the interest in the long run is going to be far more expensive than if you got the right product to start with. Certainly knowing your own numbers, banks are going to be doing a credit assessment on this. It's not going to be, oh, you're a business and you need a loan, here's some money. They're going to want you to have an understanding. And if you're working with a broker, this is the part of the broker, is understanding your numbers so we can portray that to the bank to show what's going to happen during this next 6-month period, and then what's going to happen afterwards based on knowing the trends that the business was operating in prior to the first 12 months. Being able to really communicate that is going to enhance your ability to get as much as you can from the bank while you can. And identifying the risks. We're in a really massive, risky part of the environment at the moment, and you can't just glibly sort of say, well, we're all in it, so therefore I don't need to do it. Businesses still want to know that you've thought about the risks and you've got ways to mitigate those risks. So, for example, some examples would be key person. If you're a sole trader or a key director to your business and you're the only shareholder or the person that actually gets out there and delivers the service, that's a key person risk. They want to know that you're going to have perhaps life insurances, income protection, business continuity insurances to say that if you get hit by a bus, the chances are pretty slim because you'll be at home. But if something were to happen to you, that they've got an avenue to have that debt repaid, or at least the business to continue trading while you get back on your feet. Market risk is a big one, and they would expect that everyone has some level of knowledge of their market risk at the moment, because not everyone is in the entirely same boat. If you're in the food retail business at the moment, like a IGA, you're probably in a much better market than you were 3 months ago. So you need to address that in a different way. If you're in a business that's linked to retail trade, you're in a much higher risk. And how are you going to transition your business to be able to continue to sell products if you plan to? Or if it's just a complete shutdown, how do you plan to rebuild your business to give them confidence that you're going to have one once you reopen? And the counterparty risk, this is massive. They want to see that people are thinking about their supplier relationships, their client relationships. If you've got maybe only one or two key clients or one or two key suppliers that your business depends on, they want to know that you've thought about how you substitute those clients or perhaps vary your customer base to de-risk the business in these hard times. Or if your supplier turns off because they've gone out of business or shut their doors, do you have alternatives to be able to keep operating? So you want to make sure that you've got your counterparty risks reviewed and looked at. For us, I'll tell you a little bit later, we've got a free application guide. So if you are thinking about tackling it yourself, by all means, get that guide off us, have a review, make sure that you're, being thorough in the application process. But I would probably say just get advice from a professional broker, and make sure that they've got experience in business lending. That's going to be more appropriate than ever, I think. And I don't really care whether you help with that. I hope you use us, but if you use a broker that you use and know and trust, by all means, go and use them, because it's going to do you a better service than perhaps tackling it by yourself. And finally, in the application process, I would encourage businesses, perhaps if they've got the plans and they know their numbers and they know how they're going to deploy cash at varying times when they need it, ask for more now than you need and then use less, because you don't want to have to keep going back to the well, because it could start to become a really laborious process if every 3 months you need a top-up loan. So if you can get as much as you can now and then be really scrupulous in the way that you dole that money out into your business over the coming months, that's going to be a more efficient way for you to run than stopping everything every time you've got to go through a bank application. Big question I'm answering at the moment, this has been my week, is what if I can't repay debt? The loan repayment deferrals are alive and active in all the lenders. What's important to understand is that it's not an event of default. So it's not going to negatively impact your credit score in terms of an event of default. And the ABA, the Australian Banking Association, is even making recommendations now that for a period of time after, because of positive credit reportings, there will be an impact to credit scores because it's going to show missed payments for consecutive months. But for businesses and people who have gone through loan repayment deferrals, that's going to show that they have basically gone through this period, and that will almost be ignored. There's probably going to be a lowering of the credit score expectations going forward. So fear not in terms of going into a loan repayment deferral if you need to. But what's important is there's a bit of a misnomer out there with a few people. A deferral doesn't mean that it's interest-free. Banks are still charging interest. They're just deferring that interest costs to later. So they're capitalising that cost onto your loan. So in fact, your loan will get bigger during that period of time. A lot of businesses I've spoken to need the deferral right away. They've effectively, I work with a large gym group. They need the loan deferrals right away. They're not allowed to trade. Their revenue's falling off a cliff at the moment. So they're in more of that, let's defer everything we can, reduce the cost to absolute bare minimum and do what we need. And the deferrals are helping them a lot. But however, if you're continuing to trade and you've got an income through this period and you've got a tail of work, say, for the next 2 or 3 months that you can finish off before you need to consider that scale down mode, you may want to defer the decision to go into a repayment holiday to that point. Because you are mounting increasing debt, you don't want to do it too early and then have a bigger debt to repay at the back end. The longer you can delay it, if you only have to defer your loan repayments for 3 months, that's a better scenario than deferring it for 6 months. There are other scenarios where it can be an advantage for people who are carrying perhaps high interest business loans, credit card debt, overdraft, core debt, personal loans, things like that tend to be higher interest cost. If you can defer your long-term debt, such as personal mortgages, commercial debts, and redeploy that cash to pay off those higher interest things in this time, you might come out with a better balance sheet for it. So there's ways to be strategic in terms of using your loan deferrals as well. And like applying for a loan, if you're thinking about deferring a loan, even though brokers can't assist with the actual implementation of a loan deferral, certainly pick up the phone and speak with one of us to talk about your strategy around it, because you might get some clues on where it might be best be suited. That's basically all I've got for you. There's a few free things I want to make sure that you guys have got access to if you haven't had it already. The 7 days to a better cash flow. I've been circulating that pretty widely through the WBA members already. If you haven't got it, email me. I'll make sure you get on the list, because there is a lot of hints and tips and checklists and things in there that's going to help you lean up your business and focus on cash flow when you really, really need it. And the other thing is how to get a business loan guide. Happy to circulate that as well if you're planning on tackling it yourself. Even if you are working with a broker, it's good to go through that to understand the process as well. So happy to shoot those out to you. And finally, before I wrap up and move to questions, we've got a bit on the advisory side at the moment, and this is certainly one of the areas of the business that we're seeing people are asking more on. The first one is stress testing your cash flow. One-on-one session, $100. Normally we would charge, like for any one-on-one hour-long session, we would charge normally $500. We're doing these for $100. You only need 6 numbers to be able to start to understand the impacts of some of the decisions you might make on your business. Really useful session. I've run it with a few clients now, and they've changed their way that they're approaching it the next 3 months for it. So I'd highly encourage you or any business that you know that's worried about it to get in touch, and we're happy to run those sessions as often as we need. Next one we're calling the survival sessions. There's 3 areas, and it's really going to go through what I've talked about, but in far more detail, which is getting that review in depth and understanding your numbers, including that stress testing process. The next one is developing the strategic plan. And then finally, how you're going to fund your business and the plan over the next 3-6 months as you need, and then into growth on the other side. We can do these one-on-one, or if you like, up to groups of 4 people so you can share that cost. So if you've got some other businesses that you don't mind sitting around a table and holding each other to account, that might be a really good way to do it. And it could be a really cheap way to get some, I think, really valuable advice. And the value of advice at the moment is that I can be quite unemotional about your business. You know, I'm a small business owner. I've got the same fears about my business, and I've got mentors that I rely on to just call facts for me, to really ground me. So if you need that sort of one-on-one or ongoing coaching in a group, let me know, and we'll see if we can't get a few groups together and keep things moving. On that note, there's all my contacts where you can find me, and happy to answer any questions that we may have.
Thanks, Trent, for all that information. For those of you that are watching, if you hit the Q&A button, which is at the bottom of your screen, you'll be able to type in a question for Trent to answer whilst we're online. But do take note of his contact details there. And as a business association, we are encouraging you all to reach out to people within the local community if there's anything that you're worried about, to get the right advice on making the right decisions. Obviously, it's a really unusual time at the moment. Not many of us, well, none of us have been through something like this before. So if we can stick together and get the information from experts from within the local community, then we'll be able to support each other in making the right decisions and pulling through the other side stronger. So you're more than welcome to leave if you've got the information that you need, but do hang around and ask any questions that you've got. One question coming through there, Trent, what are typical bank rates for the unsecured business loans?
Yeah, full products haven't been announced yet. The banks are really scrambling on this because the government's announced it, saying we're going to do these government-backed guarantee loans, but no bank in Australia has actually got the mechanism to deliver them at this stage. That said, next week we're told that they will be in place. They have been absolutely scrambling on it. So full product details haven't been released. However, indicatively, they've been said that the rate will be somewhere between 5.5% and 7.5%. So when you look at typical unsecured business lending that I've been doing, you're looking at rates of around 15 to 20%. So when you're thinking of 5 to 7%, it's actually quite an attractive way of looking at maybe tidying up that higher interest debt. And that's why I say it is higher than your home loan, it is higher than your secured debt. But if it can help bridge a gap, understand how long that gap's going to be and use the debt wisely, just so you don't keep mounting up interest on interest.
Thank you. That question was from Scott Ferguson at OTB Developments. Cashier from Recruitment, who's one of the Wanneroo Business Association board members as well, she left a comment. Great presentation, Trent. For those that haven't required funding previously, what kind of interest rates are businesses looking at? If there is a range, could you provide, as no doubt is dependent on personal circumstances?
Yeah, basically, like I was just saying, so that 5.5% to 7.5% is what you're looking at in terms of the government-backed guarantee lending. In terms of standard lending, you know, if you've got a business that's going to continue to trade okay and you're going to go through standard lending, then standard lending rates will apply as they always have. If it's secured, it's probably a rate in the business world of around 3.5% to 5%, depending on, you know, the risk of the business and all those type of things that are assessed. If it's unsecured lending, you could be looking higher than that, you know, that range, that government-backed guaranteed range. Asset finance is pretty cheap at the moment too. I mean, you're looking at, you know, new cars and things like that are around 4%, which is extraordinarily low for asset funding. So yeah, rates are going to be case by case basis, but certainly most things will be sub 10.
And Julie Walsh, thanks Trent, great presentation. If we can't get to one of your sessions, what are the most essential parts of stress testing your cash flow over the next 6 months? We're guessing that we will be shut down, but we can still click and collect or deliver.
Yeah, look, the most important parts of it are really understanding the inputs to your business. So in terms of where you expect sales to land and revenue and the volumes. So where's your price versus volume sensitivity? You know, are you going to move to a lower price to sell more? And in which case, how are you going to sell more will be the strategy that falls out of that. You know, are your suppliers going to be charging more in this period because they've got to protect their profit margins, or are they going to be having a similar strategy? Things like debtor days and how long you take to receive your money from your clients. If you're a click and collect business, it's probably not a big issue, but how long you've got to pay your suppliers is a big one. Obviously, I'll be having a chat with a lot of your bigger supplier groups. You know, if you've got multinationals and big national companies, I'll be trying to stretch them as hard as you can to avoid having to use bank funding. But if then you've got to use funding in between those type of things, that adds in an interest cost to your expenses. So everything interplays with itself. You know, if you need a one-on-one session, I can be really flexible with the time. Happy to, you know, run through the numbers and show it in your particular case. But ultimately, you just want to be looking at those core areas of revenue, expenses, and then your collections versus your payments. They're probably the real key areas to focus on.
Well, thanks, Trent. Hopefully, Julie, that gives you the information that you were after. But I guess just reiterating what I was saying before, take down the phone numbers and the contact details there, and any little question, big or small, please get in touch. Trent will be more than happy to assist with answering your questions and helping out.
Don't feel I'm going to turn the clock on and start charging if you've just got a small question or want to bounce an idea off someone. That's what we're here for. As I said at the very start, I want to see as many businesses get through this as possible. If you want us to do some more fundamental work, then of course, you know, we're a business too and we'll need to charge for it. But however, you know, I'm happy to keep the dialogue up as well.
Yeah, and we're seeing that across the board from different services, different members, people within the community. People just need to speak up and ask, and there's always going to be someone there that can help. So that's it for the questions that have come through. So we'll be ending this session, but please get in touch with us if you've not managed to get those contact details. And for the members that may be logged in a little bit late, the whole session will be in our Facebook group for you by the end of today. So stay safe, everyone. Have a good weekend, and we'll see you on Tuesday. We've got the next webinar to cover off the state and federal stimulus packages, so make sure you log in for that one. Thanks, guys.
Thank you.